All right, so get this. Bitcoin is back up to a whopping $65,000. We're diving into an article today to try to figure out what is fueling this surge. It's called Bitcoin Price Rebounds to $65,000 amid BlackRock ETF buzz and U.S. election uncertainty. You ready to unpack this?
Absolutely. It's a fascinating situation, really. A convergence of factors are kind of pushing Bitcoin's price upward. We've got renewed investor confidence, a potential game changer from a major financial player, and, of course, the ever-present uncertainty about the future.
Okay, so right off the bat, BlackRock ETF buzz. That sounds like it could be huge, GE. Tell me more about this buzz.
Well, imagine you want to invest in Bitcoin, but aren't comfortable navigating those complex crypto exchanges. An ETF, or exchange-traded fund, simplifies this. It lets you buy shares that represent a basket of Bitcoin, just like buying shares of a company on the stock market. And BlackRock, a massive player in the financial world, is proposing to launch one.
So this could be Bitcoin going mainstream, kind of like the Wall Street seal of approval.
Exactly. BlackRock's involvement sends a strong signal to other investors, especially those who have been hesitant about Bitcoin. It suggests that they believe Bitcoin is transitioning from a speculative asset to a legitimate part of the financial system. And if the SEC approves this ETF, it could open the floodgates for a huge influx of institutional money.
Wow, that's pretty wild. But the article also mentions uncertainty around the U.S. election. How does that factor into the equation?
Well, different candidates have vastly different views on how cryptocurrencies should be regulated. The outcome of the election could completely change the regulatory landscape for Bitcoin, making it easier or harder to invest in and use.
So even something as decentralized as Bitcoin can be swayed by something like an election.
It's a good point. While Bitcoin was designed to operate independently of traditional financial systems, it's still affected by events in the wider world, including political decisions.
And what about the Federal Reserve? The article mentions potential policy changes there too.
Right. The Federal Reserve's monetary policy, particularly regarding interest rates, can impact all financial markets, including crypto. Think of it this way. If the Fed hikes interest rates to combat inflation, borrowing costs increase. This could mean businesses and individuals have less disposable income for investments, which could potentially slow down the flow of capital into Bitcoin.
Okay, so we've got BlackRock potentially ushering Bitcoin into the mainstream, but also the looming U.S. election and potential Federal Reserve moves, adding a layer of uncertainty. Where does this leave investors? Are people feeling confident or running for the hills?
Well, the article points out that investor confidence is actually up, and BlackRock's involvement seems to be a driving factor.
So it's not just about the ETF itself, but the message it sends, like, hey, if BlackRock is on board, maybe we should be too.
Precisely. BlackRock's move is being interpreted as a sign that Bitcoin is here to stay. What's particularly interesting is the article's emphasis on institutional investors. These are the big players: pension funds, hedge funds, asset management companies, the heavy hitters you know.
Right, so not just folks dabbling with a little Bitcoin on the side. We're talking about the pros with deep pockets and a long-term outlook.
Exactly. And they tend to be less reactive to short-term price swings. They look at the big picture. Their involvement suggests a belief in Bitcoin's long-term potential, even amidst the uncertainties.
Okay, so even with the election and the Fed's potential moves, the big players are placing their bets on Bitcoin. Interesting.
It really is a fascinating development. This growing interest from institutional investors suggests a shift in perception. They're starting to see Bitcoin not just as a speculative asset, but potentially as a store of value, a hedge against inflation.
A digital gold, some might say. But what about the average person who's thinking about dipping their toes into the crypto waters? What do they need to keep in mind?
That's where it gets really interesting. It's crucial to remember that Bitcoin, like any investment, carries inherent risks. Its price is notoriously volatile, capable of swinging dramatically in short periods.
Yeah, I've seen those headlines, people making and losing fortunes on Bitcoin seemingly overnight. It can feel like a roller coaster.
Exactly. So for the average person considering investing, it's essential to do your research, understand the technology and the market dynamics, and perhaps most importantly, never invest more than you can afford to lose.
Solid advice. It's easy to get caught up in the hype, but risk management is key. Speaking of hype, let's circle back to BlackRock. Their potential ETF is generating a ton of buzz, but it's not a done deal yet, right?
Correct. The SEC has been quite cautious about approving Bitcoin ETFs. They have concerns about market manipulation, custody of assets, and investor protection.
So even with a giant like BlackRock behind it, there's no guarantee this ETF will see the light of day.
That's the regulatory landscape right now.
Yeah.
But even the possibility of approval is having a significant impact on Bitcoin's price and investor sentiment. It's a waiting game at this point.
All right, so we've got this fascinating tension building, growing institutional interest, potential mainstream adoption with the ETF, but also these regulatory hurdles and those economic uncertainties we talked about. What does this all mean for the future of Bitcoin?
That's the million-dollar question, isn't it? To answer that, we need to step back and look at the bigger picture. On one hand, there's an argument that Bitcoin is maturing as an asset class. We're seeing greater adoption by businesses and individuals, more sophisticated investment products like the proposed ETF, and even nation-states exploring its potential.
So there's this narrative of Bitcoin gradually becoming more integrated into the global financial system, kind of weaving itself into the fabric of how we think about money.
Precisely. And this narrative is further fueled by concerns about inflation and the stability of traditional currencies, like the US dollar. Some view Bitcoin as a hedge against those risks, a digital gold, if you will.
That makes sense. If you're worried about the value of the dollar eroding over time, Bitcoin's limited supply and decentralized nature start to look pretty appealing. It feels like a safe haven in a storm.
But on the flip side, you have the skeptics who see Bitcoin as a speculative bubble. They argue it's driven by hype and prone to those dramatic crashes we talked about. They point to its lack of intrinsic value and the potential for governments to crack down on it.
Right, the it's all going to zero crowd. They've been around since the early days of Bitcoin.
And to be fair, Bitcoin has gone through several boom and bust cycles. It's not for the faint of heart. But this time feels different, doesn't it?
It does feel like there's a shift happening. This isn't just tech enthusiasts and early adopters anymore. We're talking about major financial institutions, governments, even taking Bitcoin seriously. But that brings us back to those uncertainties, especially the U.S. election. How could that play out in the Bitcoin world?
The U.S. election could have a profound impact on the regulatory landscape for cryptocurrencies. Remember, different candidates have very different views on Bitcoin. Some are quite crypto-friendly, they advocate for light-touch regulation, and are even exploring the idea of a central bank digital currency, or CBDC.
So a digital dollar alongside Bitcoin. Interesting.
Yes. It would essentially be a digital version of the U.S. dollar issued and controlled by the Federal Reserve. It's a concept that's gaining traction globally. But some candidates are more skeptical about cryptocurrencies overall. They raise concerns about money laundering, tax evasion, and the potential for Bitcoin to destabilize the financial system. Their policies could involve much stricter regulations, potentially hindering Bitcoin's growth.
It's almost like we're talking about two different possible futures for Bitcoin depending on who wins the election.
Exactly. And then there's the Federal Reserve. Their decisions on interest rates can have a ripple effect across all financial markets, including crypto. If the Fed raises rates aggressively to combat inflation, it could make riskier assets like Bitcoin less attractive to investors.
So even if the regulatory environment is favorable, macroeconomic headwinds could still impact Bitcoin's price.
Precisely. It's a complex and interconnected system. Bitcoin doesn't exist in a vacuum. It's influenced by politics, regulations, global economics. It's all connected.
This has been a roller coaster of information, but I'm starting to get the bigger picture. We've got BlackRock, this major player, potentially opening the floodgates for institutional investment. But at the same time, we've got this regulatory uncertainty, the political unknown of the election, and the ever-present risk of economic turmoil. It's a fascinating, if somewhat nerve-wracking time to be following Bitcoin.
It really is.
Or-
And that brings us to a crucial question for you, our listener. It raises kind of like a vital question for you, our listener. What does Bitcoin at $65,000 really represent? Is it a sign of mainstream acceptance, a temporary bubble inflated by speculation, or perhaps a bit of both? What do you think?
It's the million-dollar question, and I don't think anyone has a crystal ball to give us a definitive answer. But what I find really interesting is this idea of institutional investors, like BlackRock, taking a long-term bet on Bitcoin.
It is a crucial point. These are sophisticated players with vast resources and a deep understanding of financial markets.
Yeah.
They're not just chasing quick profits, they're making calculated decisions based on their assessment of Bitcoin's potential.
So even with all the uncertainty surrounding regulations, the election, and the global economy, these big players are essentially saying, we think Bitcoin is going to be a significant part of the future financial landscape.
That's certainly one interpretation. Their involvement lends credibility to the idea that Bitcoin is more than just a speculative asset. They seem to believe it's a potential store of value, a hedge against inflation, and maybe even a foundation for new financial systems.
But we can't just ignore those uncertainties, right? The political landscape could shift dramatically. Regulations could tighten, and the global economy is still facing some serious challenges. Those could all throw a wrench in the works.
Absolutely. It's a balancing act. On one hand, you have the undeniable momentum of Bitcoin's adoption, the influx of institutional capital, and the constant technological innovation happening in the crypto space.
And on the other, you have those very real risks. The volatility we talked about, the regulatory hurdles, and the potential for those macroeconomic shocks that could send Bitcoin's price tumbling.
It's a lot to consider. So what does this all mean for you, our listener? As always, it comes down to making informed decisions. If you're considering investing in Bitcoin, or any cryptocurrency for that matter, do your research, understand the risks, and never invest more than you can afford to lose.
Wise words. It's easy to get swept up in the excitement, especially when you see Bitcoin hitting new highs. But it's important to remember that this is still a relatively new and evolving asset class. There's a lot we still don't know.
And one final thought to leave you with. If BlackRock and other major institutions are indeed betting on Bitcoin's long-term potential, what does that tell you about the future of finance? Is this the beginning of a paradigm shift, a gradual evolution, or simply a speculative blip on the radar? We don't have the answer, but it's certainly something to think about.
Something to ponder for sure. As for us, we'll be keeping a close eye on this fascinating and ever-changing world of Bitcoin. And as always, we encourage you to check out the original article we discussed today for more details and insights. The link, as always, is in the show notes.
Remember, the goal of the deep dive is to equip you with the knowledge and perspectives to navigate this complex landscape. We might not have all the answers, but we hope to spark your curiosity, challenge your assumptions, and leave you with more questions than you started with.
Because in the end, that's what makes a deep dive worthwhile. Until next time, happy exploring.